Hello and welcome everybody to the eToro Quarterly Popular Investor Forum. And today we have a really great panel of both special guests and also our regular panelists to talk about everything that's happening in the market. And it has been a very difficult market recently. So just before I get started and I introduce the panel, I just want to say that this is not financial advice from anybody on this panel, and anything we say is our own opinions, and we are not employees of eToro. So now I have the housekeeping out of the way, I'm going to introduce everybody on the panel. So we have, to start off with, we have two special guests on the panel today. We have Jay Smith, also known as Jaynemesis, who's one of the most copied popular investors on the eToro platform. And we also have Ingvar Rueckemann, and he's known as Ingruc on the eToro platform. And he has been kind of one of the rising stars this year and has gained quite a lot of popularity on the program. And then we have our regular panelists. So just to get started, Jay, if you could just introduce yourself and explain a little bit more about yourself.
Sure. Yeah, I'm Jay. I think I've spoken to most of you to meet Zach at the event as well, so that was great. Well, lots of people at the event, to be honest. Yeah, I mainly kind of focus on growth investing. I've been on eToro for a pretty long time now. I joined when they first did Bitcoin, actually, back in the day. That's what lured me onto the platform. And yeah, that's me, really. Jaynemesis on eToro.
Perfect. Thanks, Jay. Over to you, Ingvar.
Yes, thank you very much, by the way, for having me here.
You're welcome. Thanks for coming.
As you say, Ingvar, and the name on eToro is Ingruc. I'm originally from Germany, but I live since 5 years in Sweden. And I joined eToro about 2 years ago. And 1.5 years ago, I joined the Popular Investor Program. And what I do is that I build a portfolio which is supposed to generate nice returns over the long term. And I like to do that by investing in undervalued stocks, and sometimes also stocks if they come at price.
Okay, thanks Ingvar. Over to you, Simone. You could introduce yourself.
Hello, everybody. I'm Simone. You can find me on eToro as Simone Rizzetto 88. I work as a scientist in biomedical research. I'm doing bioinformatics, which is a hybrid between computer science and biology. And I'm using this expertise to manage my portfolio and select the best stocks in this area.
Awesome, thanks, Simone. Over to you, Zach.
Hi, everyone. I'm Zach. Under the name Fund Manager Zach. I am a full-time investment director at a crypto asset manager, but most of my stocks are not. Most of my holdings are not crypto, sadly. I trade mainly using macro, and yeah, that's me.
Awesome, and he also has some really good lights in the background as well to set the scene. Okay, cool. Over to you, Amar. You introduce yourself.
Hey everybody, I'm Amar Singh 1234 on eToro. I started on YouTube about 3 years ago, just sharing my own portfolio and how I was investing. Basically, I tend to invest in companies with a strong moat, and I try to buy them at reasonable prices, and I hold them for the long term. I've been on eToro for about 2.5 years now. I work as a lawyer, and I'm an aspiring full-time investor.
Awesome. Thanks, Amar. And just to introduce myself, just before we wrap up on the introductions, my name's Stephen. My username on eToro is Bees84. I invest in a number of different sectors, but I'm mainly a macro investor. but I invest in stocks, crypto, some commodities, and some other areas. And I'm a full-time investor. So now the introductions are out of the way, let's get started on the more in-depth topics about what's happening in the market. I think everyone will agree it's a bit of a shaky market at the moment, but we're going to dive into it. We'll dive into the weeds, as they say. So I just wanted to do, before we get started, I just wanted to do like a recap of really what happened in the last quarter. Just so everybody can have a better picture of some of the key things that happened in the last quarter and how they affected the market. And I think I will start with you, Zach, if you don't mind, and just ask you about quarter two and any of the major things that happened in the last quarter that may have affected your portfolio. You know, such as interest rates, or we could be talking about inflation. Could you just go into some of the areas that impacted you in quarter two?
Yeah, sure. So everything is shit. That's a summary.
Yeah.
Interest rates are up, so everything has fallen because of it. In crypto, it's worse because we had the great deleveraging. I think Terra Luna is the thing that caused the capitulation of very over leveraged crypto market, and we're starting to see all the defaults come about. So that's been kind of interesting. Definitely crypto is I hold quite a bit, so if my portfolio quite negatively. Interest rates going up, I think that's kind of expected, and I think we've mostly priced it in. So so the war has happened and a lot of commodity prices are increasing. So we're expecting a lot of inflation. I'm not sure I agree with the inflation narrative, and we'll get into that a bit later, but that's kind of how we see the quarter. Just a lot of rising interest rates, markets pricing it in. Growth stocks have been mostly affected, crypto's mostly affected, and yeah, Terra Luna's capitulation is a major one.
And did inflation have a major impact on some of the stocks in your portfolio?
So I'll say yes and no. I was long some commodities, so that was good. But the more growth focused ones, or the not so revenue generating ones, not so positive cash flows, have definitely been affected. I have Intel. Intel's down quite, so things like that are down. And plus China has taken an absolute shellacking this year especially. Covered the last couple of weeks, but China down a lot. So I love Chinese stocks.
It's improving though. It's improving though the last month or two.
Yeah. I mean, it's been interesting, right? Like the whole world is increasing interest rate, and China's like, no, we're gonna print more money. So we'll see what happens there. Yeah,
it is. It's a completely different dynamic to what's happening in Europe and in the US. They're effectively doing the opposite, right? An accommodative monetary policy. Yeah. So anyway, we'll come on to that a little bit later. Okay. Thanks, Zach. And over to you, Jay. You're quite heavy, I think, in tech stocks. So did obviously those increases in interest rates, they had an effect on your portfolio? How do you think the last quarter went, and how did you reposition? Did you reposition your portfolio to try and offset some of those effects?
To answer your last question first, no, not really. I pretty much stayed where I was, to be honest. It wasn't too bad for me, actually, because although I'm very exposed to tech, I'm also very exposed to renewables, and they really had a fantastic earnings, especially the solar industry was really kind of booming. So I think Enphase and SolarEdge are actually up like 10% or 20% for the year. They're doing pretty well, and they seem to kind of be holding their own because of the situation in Russia and the impact on Germany with the oil and gas shortages and everything. In terms of inflation, yeah, I mean the interest rate hikes have definitely been, I think, the story of the quarter, really, haven't they? But yeah, as Zach said, I think to be honest, it's mostly priced in terms of where interest is going and where inflation is going. I think. Probably the thing that's most likely to disrupt that is think going to be, what happens regarding the gas shortages in Europe when winter rolls around towards the end of Q3. I think that's going to be the real big event that certainly for Europe is going to drive markets, but probably will impact global markets.
Yeah. Okay. And what do you think about some of the earnings that have come out for tech stocks and some of the tech stocks in your portfolio? Obviously, the market has been really affected by those increase in interest rates. But have you seen big differences in terms of the recent earning calls in tech?
For my stocks, most of them actually did pretty well. They were either, around analyst estimates and even in line with guidance and stuff, or already ahead of it for the most part. But that's largely because I don't really have too many kind of physical goods. And when you think about where a lot of the inflation lies, it's in logistics and transportation and fuel and energy and those sorts of things. So if you're Microsoft, for example, then it doesn't really affect you too much. And then likewise, advertising, I think, is somewhere that's starting to be hit a bit more. And obviously companies that don't really have good cash flow, but generally I positioned into cash flow positive companies towards the start of the year. So it's been okay for my earnings overall. Pretty happy.
And they're starting to do some hiring freezes, well, quite a lot of hiring freezes in tech as well, right? To try and protect that bottom line.
The auto industry is actually one of the ones struggling the most, to be honest. We saw the Tesla 10% cut in the quarter as well. So
be interesting to see how that one plays out. Okay, cool. Thanks, Jay. Over to you, Ingvar. I wanted to ask you some questions actually, because your portfolio has held up pretty well this year. What sort of strategies did you have you put in place to ensure that you've had quite good performance this year?
Indeed, that's something which I of course also like to see in the portfolio. It's been quite stable this year, and if you work today, it's even slightly positive. So that is certainly quite nice to see in a year such as 2022. I published recently also a little review for the first 6 months, what has really been driving performance. And the surprise was not very big, because the biggest driver was Shell. So that is oil, of course.
Yeah.
Since I have a relatively large allocation to that stock, that has, of course, driven quite a bit. But what I like to see was also that the number 2 and number 3 drivers in the portfolio were actually from pharmaceuticals and from staples. Those have held quite well together with Shell and driven up the performance. And even the remaining 15 stocks which I have, they were actually not losing as much as certain sectors.
Okay. And have you lowered your exposure to oil now as the prices kind of peaked around, was it 120, 125? Or are you still keeping a kind of a long-term exposure to oil-related equities?
I still have pretty much the same exposure to oil-related stocks, and I don't think we have to assume that it has peaked here, to be quite honest. I mean, we saw a bit of a, let's say, mini crash in the oil prices a couple of days ago. But I think that is really just temporary, and in the general picture around oil, especially, is such that the supply is constrained around the world, and I think we'll see that for many months at least.
Okay. All right. Thank you, Ingvar. Simone, similar question over to you, but I wanted to ask you a bit more about the pharmaceutical sector and how that's been going the last quarter, and any hurdles in the way or any tailwinds that could be behind pharmaceutical industry.
Sure. Okay. It was pretty good for the large ticker stocks. Most of them actually managed to increase their stock price. Dividends are increasing, so they are doing very well, and they are seen as a safe harbor for most of the investors during periods of inflation. So it's a very safe bet right now. Actually, I started to sell recently few of them, like Bristol Myers Squibb. I think it starts to go a little bit too high. So I think it's unusual to have a pharma that starts to have PE ratios around 30. So I just start selling some of them, and that free up some cash to invest in some riskier tech stocks, which is the other side of the pharmaceutical, which is the one that was not doing so well, because those are stocks that are not generating revenues yet, still needs years of development before bringing drugs to the market.
Yeah.
And those are like down, I think, compared to February 2021, there are probably some small biotech stocks down 80% or stuff like that, which I believe it's deeply undervalued. And I think those are very good opportunities right now.
But what's the main issues that they're facing right now? Is it being able to get kind of funding for drug trials? Because obviously it's more speculative, and as the interest rate rise, it's harder to borrow money, right? Well,
yes, so
more
it's
expensive.
multiple things. First, there is general the risk of portfolios. People don't want to take anymore, therefore biotech stocks are like out of the portfolios immediately. You cannot do that with taking high risk.
Yeah.
Second problem is people after the pandemics are rotating out of biotech investments. That exacerbated the sell-off, and there, I think inflation and interest rates could have played a little bit of a role here, because of course they raise a lot of money in order to develop new drugs, but most of them actually managed to have a very large cash position, probably enough to drive their development for the next 2 or 3 years. That kind of indicates a few possible scenarios. Either that investors believe that inflation will continue to increase or to still remain high for the next 3 years, and in that case, even if the stocks have enough large positions in cash, they will run out of that before inflation will go down. That's one possibility. The other one is that given they have cash, will also lose value because of inflation. So that can also be happening.
Okay. Thanks, Simone. And I wanted to pose the question to you. Oh, sorry, and Amar, if you could also just talk about some things that happened in regard to your portfolio in the last quarter, and any areas of pressure or burden that you felt.
I mean, there's good news and there's bad news. I mean, the bad news is that there was a lot of red, and it continued, from the first quarter and into the second quarter. So the good news though is that valuations have come down quite a bit.
Yes.
So a lot of companies that have for several years, like Amazon, Google, Facebook, a lot of these companies, especially I think Facebook has a lot of value in it right now. So I've been buying more. I think this is a long-term game. So, these are companies you can hold for many years, and in some cases even decades. So as long as I keep to my strategy, I think the portfolio will eventually recover.
Okay. All right. Thanks, Amar. I wanted to get everybody on the panel's point of view as well on inflation, and do we think that it is, obviously no one knows for certain, so this is not financial advice, but do we think that we are getting close to a peak in inflation? And if so, why do we think that we're getting close to a peak in inflation, and what indicators do we need to look at to show us that we are hitting peak inflation? So Zach, any views on that? Whether you think we might have hit peak inflation and what you're looking at?
Okay, this is going to be fun, so I'm going to try and pose this to you guys.
Okay.
Okay. So we think about inflation. What it is too much money chasing too few resources. We all agree with that kind of definition, right?
Correct.
Basically the classical definition. But we think about the world as it is today. Is that really the case and that's the cause of inflation. So we think about oil. Did oil increase really because there's too much money chasing too few resources? I mean, a lot of it's contributed to the war with Russia. A lot of it is also contributed to energy policies we had over many years. So is that really an inflationary factor? I don't know. I don't know. Is it a convenient excuse to raise prices? The answer is, oh, definitely yes. My McDonald's hamburger is definitely smaller. I don't know if you guys ever felt that, but it's definitely smaller.
Yeah.
So, yeah, I don't know if this is true inflation in the sense of the word, but I do think cost of living is going to go up. I do think that it's a convenient excuse to raise prices.
Yeah.
I do think we are going to have some issues in terms of food over the next coming few months, especially with the US dollar where it is now. So I do see those issues. I want to pose an open question as well. Do you guys think that, you know, this inflation is true inflation in that sense?
Can I answer that?
You want to answer that, Jay?
Yeah, no. I think to some extent demand is up. I mean, I think a good example is looking at airlines and the amount of people that are vacationing because of lockdown easing around the world this year and towards the end of last year. I mean, there's still, you know, countries like Japan and stuff that are really only just now starting to reopen as well. So I think that certainly plays a role. And then there's the supply chain issues as well, which are still ongoing, and also obviously rely on a lot of oil to move things around. So like in terms of like transport and logistics, I think that that's certainly not helping. And I guess the other thing is like looking at, do we really see the problem kind of easing off? And for me, I don't think I do really. I think Russia seems pretty set on you know, trying to extend this war out at least until through winter and see if they can kind of squeeze Europe a bit on supply of gas, more so than oil. But even still, you know, again, massive contributor to inflation. The UK, you know, the price of electricity and house bills is up 50%. So, you know, it's pretty substantial. 50% for gas, at least, in heating. So it's, you know, I think that you know, there's like a lot of people kind of using those resources to kind of use your example. Yeah, there was something else I was going to say and now I've forgotten it. But there was one final, but no, it's gone. I've lost it. So we'll stick with that for
now. Okay. But Jay, do you tend to think it's more kind of demand related or supply related or a mixture of both?
I think it's mainly supply related. And that was the other thing I was going to mention, actually, the fact that when you actually look at the oil and gas companies, you know, they're not really increasing production very much, most of them. Certainly in Europe and stuff, they're really, you know, looking to expand and stuff. And even, you know, even Germany with their nuclear power plant, they've got the biggest nuclear power plant in Germany. I think it might be the last one they have, which is due to be decommissioned in December, which is very bad timing. I don't think they've planned on stopping that yet, which is kind of, you know, staggering. And obviously that in itself is going to be a catalyst for more electricity in Germany as well. So yeah, I think it's primarily supply related, and really that does come down to Russia for a large part, but because I don't see that ending until next year at the then I see it continue. And then, as I said, the other stuff on the demands from logistics and people moving around more.
Yeah, yeah. I think you're right. I think it's going to take a long time for us to be able to look at this energy shortage and be able to get energy from alternate sources, right? And that's not something that's going to be done in a month or 2 months. It's going to be kind of a long process. And I also think demand is quite stable, really. I think demand has been quite stable over time. I think obviously what happened in 2020 during the COVID is there was a massive restriction on the supply chain, and there was a big supply chain bottlenecks, and that really took out a lot of the supply, and it takes a long time for that to kind of come back online, and there's got to be incentives. There's got to be incentives for supplying that type of stuff, and it takes some time for it to ramp up. So yeah, I think it's going to need some time. Ingvar, do you think inflation has peaked? What's your views on inflation and the forward-looking inflation?
Yeah, that's really the billion-dollar question for everybody in the world. And I find it impressive how even the central banks are struggling with that question. You really see it in approach, how they really emphasize that they want to be reacting to the data, which is logical, of course, but also shows, and I think Jay Powell actually said that a couple days ago, that they now actually see how little they understand inflation. So I'm just going to try to make an educated guess on it, just to get a bit of thoughts around it. I think everything that has been said so far is very true. Generally, I believe it's a mixture of both demand, which is coming back online, and supply, which is maybe not that much yet coming back online. One thing we didn't mention, for example, were the lockdowns in China, which were still ongoing in Q2, and will probably still go on at least for the next 2 quarters, and maybe even after that. When I look at inflation itself, if you look at it mathematically, it's really the rate of change, right? How much more expensive something becomes. Yeah. And for me, if I think about it intuitively, there is a level where it simply peaks, because if people have to spend more money on essential goods, which they need every day, every week, then at some point, unless your, say, wages and salaries are increasing at a similar pace, you will have to cut spending somewhere. So for me, really, at some point, it has to peak. I can't really say this is right now, or this will take a couple more months but it just feels, if you look at it at the moment, that we might be somewhere close to a peak, because even if now energy prices continue to increase, they will do so from a higher base, meaning the percentage increase is potentially lower than before, if that makes sense. Yeah,
I tend to agree with you, because there are some signs that inflation could be peaking. Like if you look at some of the major drivers of inflation over the last 6 to 18 months, a lot of it was second-hand cars, the cost of second-hand cars, which were increasing, and those have started to go. The cost of second-hand cars have started to come down a little bit recently, so that's a good sign. Maybe that inflation could be potentially peaking. Also saw that fertilizer costs as well had started to come down slightly as well, and obviously food is one of those things that had caused quite a lot of inflation. So there are, I think, some positive signs there, but I think we will all find out quite soon, right? I think the CPI readings coming up.
If anyone wants to take an offline bet, we can do it.
Yeah, that would be pretty good. A CPI sweepstake.
I'm gonna bet lower, so if anyone wants to bet against me, let's do it.
Yeah, I tend to think it will be either lower or very similar to what it was.
It depends on the country. I think in America it might be lower. I'm not so sure about Europe.
Yeah, I agree with you, Jay. I keep thinking that inflation is going to peak in the US way before it peaks in Europe.
Yeah, I think so as well.
Yeah. Amar, do you have any theories on inflation?
Not really. I mean, I'm not an expert on inflation, but what I'll say is that I think inflation has become a hot potato. It's become a real political issue, just like how COVID was a political issue in the early days. So I mean, the Fed, I think, has been doing a bit too much, I think, in trying to quell inflation, especially in raising the rates so quickly and by a big number. I think I agree with what the rest have said, that inflation has probably peaked. Copper has dropped a lot. I think dropped more than 20%. So they call it Dr. Copper as a sign of the economy. So it seems like the economy is slowing down a bit. That might reduce demand as well. I tend to think that the whole inflation thing started because of the COVID constraints and restrictions. So it was more of a supply issue rather than a demand issue. So if COVID leads out of the picture, and especially in China, I think it will ease inflation quite a bit as well. Don't know what we can do about Russia and Russia's oil. I mean, that might take more time to move into renewable sources.
Yeah, yeah. I think on the interest rates, although it does seem that they have moved them, a lot over the last couple of months and over the last few Fed meetings. I think historically they're still pretty low, right? If we look at it on a big picture basis, and although they have increased the interest rates, I think that there's still a lot of demand, and I think there's still a lot of money sloshing about in the economy. So I tend to think that they probably haven't done enough yet in order to be able to bring down inflation, and I don't think they're going to stop those increases in interest rates until they see some really positive signs that inflation is starting to lower. So we'll see, but I don't think they'll risk changing their stance until there is a lot of data behind it. Simone, do you think that they've done enough on their interest rates in order to cause some demand destruction and bring down inflation?
Probably not yet. I think that's not enough. Yeah, I mean, I'm not an expert in inflation, but the way I'm not an economist, so I cannot talk about that. But the way I think about inflation is as a negative feedback loop, which basically means that higher is the cost, low, the demands will decrease. As the costs go up, demands will slowly decrease. And these kind of systems tend to move towards steady states. It's like if you wait sometimes, we'll get to a steady state in the absence of external stimulus. What are those stimulus? In the past was low interest, negative interest rates, quantitative easing, the war, and all of this. As these external stimuli are moving away, are stopping to keep inflation going up, I believe we will reach a steady state, which means inflation will stop to go up. But there may be new stimulus coming in the future, and I think the one that worries me the most is the one of related to China, and because they still have this zero COVID policy. If COVID will start to spread everywhere in China, and then they will lock down everything, well, that will be something that can bring inflation up again.
Yeah, that would affect the factories manufacturing in China and cause more supply chain bottlenecks.
Right. So we cannot predict what's going to happen if there will be new stimulus like this one. But in the absence of that, I think we are close to the peak. But yeah, there is a lot of uncertainty.
Yeah, of course. I don't envy the job of the Fed, to be honest. I think Jay Powell's probably got one of the hardest jobs in the world. If they raise interest rates too high, it could cause a recession. If he doesn't raise interest rates, then you've got really terrible inflation. So yeah, it'll be interesting. Okay, so let's move on to some positive subjects. We've moaned about the economy and some of those things that have been affecting the economy last quarter. But let's look at some of the kind of positive and the catalysts for an improved second half of 2022, if people think that it's going to be improved second half of 2022. Ingvar, what are your views? Any kind of tailwinds that you can see that could improve things in the second half of the year?
Yeah, it goes a bit back to the inflation question, unfortunately. I think we would be somewhere in the process of peaking inflation, so that would be a positive, because that would also mean that the central banks can probably reduce the pace a little bit at which they are increasing rates. And I think for markets generally, that would be, of course, something great. Markets would appreciate that. If you look at the other things going on, I think we are still going to have major issues with, related to the war in Ukraine. That is something which I don't see going away anytime soon. I think it's going to keep us busy, all of us, in the end, for quite a long time.
Are you talking about Putin?
Yes.
He won't go away.
That's exactly what I'm. No, so the war itself, I think, is going to continue for a while, unfortunately, and I think also the, let's say, weaponization of energy supplies is going to be a major issue going forward. So that is something which I don't see going away, and the impacts of that are obviously not very positive, neither for the economy nor for the stock markets. If I look a bit broader, just to look a bit outside of Europe as well, I think in China, I think maybe I mentioned a little bit before. In China, if you look at the COVID policy, to me that doesn't seem like that's going away anytime soon. There, I think for at least the next 2 quarters there will be similarly strict COVID policies in place, at least until the party congress. Maybe it's going to get a little bit better during the next year. I can't really judge finally on that. Other than that, China seems to be also keen on starting to stimulate again. I think there was some news this week that they are maybe pulling forward a couple of bond issuances in $220 billion. So that might be a positive economy for the demand pull from that side.
Yeah. Okay. Are you invested in Chinese stocks, Ingvar?
No.
You're not.
But I'm invested in commodity stocks, and I think that is really then also a big story, which would then be pulling from China if they start to spend more on infrastructure again. I think that would, of course, support commodity prices.
Yeah, there's a real divide in China at the moment in the government about this zero COVID-19 policy. They're not in unison at all. There's the premier and the president, etc. They're at a war of odds against each other on on how it's going to progress. But I do think that they are starting to ease it slightly. But it just shows if the cases increase again, whether they'll go back into lockdowns again, and this has a negative effect on the economy. But there are many Chinese stocks which are have been heavily down the last 6 to 12 months. So there could be some good opportunities there as well, I think. But obviously increased risk. Yeah. Jay, anything you're excited about for the second quarter so second half of the year?
Yeah. Well, I think first of all, I'll put on my pessimistic hat and pretty much agree with what Ingvar just said as well. You know, I kind of agree. I think you know, we're in a rough ride for a while, I think, to be honest. You know, it may well be that inflation does peak and starts to come down a bit, and you know, that could be the positive. In the US, it's reasonably like we will see that peak, you know, this quarter for the US. But the downside is that I don't think just because it's peaked doesn't mean it's going to go low, you know, or to where we want it to be. And I think actually you can see some potentially even some kind of negative feedback loops that was mentioned earlier. I think it was Amar that mentioned it. I think like if you're looking across Europe, especially where there's a lot of unions and things, we're starting to see a lot of the population really starting to protest about cost of living. And pay rises, and this is one of those things with inflation, right? Is that you know, the price of oil goes up or whatever, and then you know all these companies have to raise their prices and things, or cuts elsewhere if they want to maintain their prices. Meanwhile, you've got a lot of staff that haven't had pay rises in a while, and they're being hit by inflation. And those people are now asking for those pay rises, and when those pay rises come, which they will have to, I think, I mean. The UK is a really good example of this at the moment. We had the rail strikes during the eToro meetup, and then after that, you know, there's now British Airways now striking, I think, and I can see this spread across Europe. To be honest, I know the farmers in, I think it's the Netherlands, are striking at the moment as well. So, you know, this is a real problem, not just for that, but also for like interest rates. So, you know, generally, I'm kind of pessimistic overall, but that being said, I think the highlight I see aside from potentially commodities like gas and oil, which I don't really invest in, I think is renewables. A lot of the companies do have pretty steep valuations now compared to what they were. But I think that certainly in wind and a lot of, especially the Chinese stuff, and they just had a trade tariff change with the US as well for exporting solar related products. So I think that could be a highlight, actually, is looking at that and some of the infrastructure stuff as well that goes around it, the way that governments try to, help keep their economies stimulated while making all of these interest rate hikes. So yeah, it's a cloudy picture up there. I mean, I don't think anyone knows what's going on really properly. It's all just a stab in the dark to some extent.
Yeah. But you have to think that the governments are going to try and incentivize renewable energy, right? Especially with the shortage of the energy shortage around the world. I'm sure that they'll have a lot of things in place to support the alternative energy sector.
Yeah. Well, I mean, just to add to that quickly, wind in I think it was Ørsted and BWS systems in Europe both have over 3-year-long wait lists now for offshore wind farms. So I mean, it's crazy, and it's a similar story in solar. I'm trying to get solar panels on my house at the moment, and I've been trying since January, and we're already in July, and beginning that they probably won't be able to do it until November now. So
is there a bit long wait list then?
Oh, it's crazy, and pretty much every major solar company residents as well.
Wow.
Is that a supply chain issue, or is that kind of just demand issue?
Both. As with everything, both. I think it's 95% of the kind of the solar supply chain is reliant on China.
Okay.
So that's a big problem. And then the demand is just through the roof, especially through Europe. But even in the US, I think it's not that long ago that we had the Texas situation as well, with the grid going down and stuff. So I think we're just more aware of it now, and the rising energy costs, they want to try and take it into their own hands more. I say.
Is there still heavy tariffs? I know that they used to have quite heavy tariffs for Chinese producers. Are they still in place, or have that changed?
So that changed recently. Yeah, the US essentially watered that down a lot because all the solar companies, actually, if you go back and you listen to all the earnings calls from some of the big solar companies, them are complaining about it and saying, look, this is, we're trying to meet demand here, and it's impossible at the moment. We need help. So yeah, the US changed. I know that the UK removed VAT on a bunch more solar things. I think Europe, a lot of European countries have done the same. So it's everyone's racing for it really, and China actually is the big beneficiary. So it's kind of thing.
Interesting. Okay. All right. Thanks, Jay. Is that any interesting things that you're optimistic about for the end of 2022?
I think no. It's kind of interesting because when I hear everyone give their comments about it, all negative on what Europe's be doing for the next couple of months. So that's kind of universally interesting to make. I need to think about it.
Yeah.
But yeah, I don't know. You guys may not know this, but Stephen used to work at offshore rigging, right? So you know a lot more about it. But yeah, I think that's gonna pick up for sure. And you and I are both in uranium, so I think it's gonna fly soon. So those are the two that I'm really looking at. Energy is a huge issue. I think we can all, whether it's oil, is whatever it is, we don't have clean energy alternatives right now that can kind of meet demand. Like Jay said, solar and wind are not kind of where they need to be. So nuclear seems the most viable option. It takes 5 years to build, but uranium rods are definitely something that's more reliable than wind and solar. So
you just have to think that that uranium's the price of uranium and the uranium miners are gonna do well in the long run, because they have to recommission some of these nuclear plants because there's just going to be a lack of energy otherwise. And Obviously, uranium always gets a bad name, obviously, because of the disasters that have happened in the past. But I think generally it's a pretty safe energy source. And yeah, I think that they're going to have to commission them. I think Germany made a lot of mistakes when they decommissioned the uranium plants, and they're paying for it now. I think, well, not just Germany, but the rest of Europe is paying for it now as well. I know, Zach, you're pretty strong on uranium.
Yeah, and they just announced, I think, like a couple of days ago that Europe will now count nuclear as clean energy. Previously, it was not defined energy. Yeah, so.
And gas, hilarious.
And gas, yes, and gas. So yeah, I think of these. I think Steve and I had this for at least a year.
Yeah.
So
yeah,
it's kind of paying.
It's one of those things that it's going to take a while for it to play out, and you don't know when it's exactly going to play out. But I think eventually it will, because it makes no sense. You've got countries in Europe that are firing back up coal plants. I mean, coal plants is the worst possible type of energy source that you can have. So it makes it might make some sense as a short-term filler to be able to offset some of the energy shortage, but long term it's definitely not the way. Yeah.
So we're all gonna own uranium for this call.
Yes. Yes.
From everyone.
Put me in for some uranium. Simone, anything that you're excited about for the second half of 2022? Any key sectors or any tailwinds?
Okay, excited. I think what I'm excited about are the stock prices right now. What excites me? A lot of opportunities. That's the only things that excites me right now.
Okay, I probably shouldn't have used the word excited. I should have probably used a softer word. Okay. But yeah, what type of undervalued stocks are you excited about?
So hard to pick just one. I think there are entire sectors that are totally undervalued right now, especially biotech, small biotechs. I think you can just pick randomly and all of them will be undervalued, except for big pharma. That's different thing. But for small biotechs, I think I can hardly find one that is overvalued right now. Maybe the only one are like if they fail a phase 3 clinical trial, yeah, okay, that one it's probably overvalued because it's gonna go bankrupt. But except for that, I cannot pick one. I think I increased a lot my position in biotech stocks in the past couple of months. Actually, I gradually increased it as the market was crashing. So those are like good opportunities. So going just a little bit back to the discussion about the catalysis for the next couple of quarters. Yeah, so there are a lot of things that can happen that can change the market, but many things have been priced in, as we mentioned before, and then I don't believe we need to wait for some catalysis to see a recovery in the stock market. I think the only reason why stocks are so low is because there is a lot of uncertainty. We don't know what's going to happen. But as soon as we will have a bit of clarity, like how far we need to go to bring inflation down, will it be like 3%? Will it be 4%? As soon as we get some of confidence to see how far we need to go before we see inflation going down, then that's it. Then the market is going to go up. So, and that can happen soon. It could happen in the next few inflation reports.
I think you're right. I think the lack of clarity is, lack of clarity is often worse than bad news. So when the market doesn't really know what's going to happen and there's a lot of split opinions on what's going to happen, then the market tends to price itself in a more negative negative way. Yeah. But
sorry, Simone, we need to get you into a room with Neza. Neza is only long farm, big pharma.
oh, is
That'll be
she?
interesting. Yeah.
Okay. Well, yeah, actually, okay. Even if they went up a lot recently, there are a few ones that, like Merck, I believe, is still a good, still a very good value. P/E ratio around 16, quite decent dividends, a lot of cash, and a blockbuster drug for immunotherapies, for cancer immunotherapies, which it's increasing like 20% year over year. And recently they said they are gonna buy, they have negotiations to buy another big biotech. So I think that one is, there are big opportunities there as well.
What
I know
about
where
the?
we should get. Sorry.
Yeah, we'll get them in a room together and
Exactly.
talk
So,
Yeah,
pharma.
I'm happy to talk with them. Yeah.
Simone, what about the kind of COVID-related stocks? You know, obviously those stocks that were pretty well talked about during COVID, like the Pfizer's and the Moderna's.
Okay.
Are they done?
No, not at all. I'm not investing in Pfizer. I'm investing, I have a bit of Moderna, mostly BioNTech. I think that is one of my favorite COVID related stocks. No, they are not done because first reason why they are not done is because COVID is not over yet. It's there are still a lot of people dying for COVID every day. Many more than any other infectious disease. And it's summer in the northern hemisphere, which it's very, it means it can go a lot worse than this during winter. New variants coming up, and there is needs to get more vaccine. And also, it looks like the memory from the vaccine, the memory that immune system generates from the vaccine, it fade away relatively quickly. So people will have to continue to get booster shots to get updated with the most recent variants and to boost their immunity. Then there will be like new people becoming eligible for the vaccine every period of time. Now, people that were not eligible before, they are getting eligible. So there will be more sales. And the most important thing is that they are expanding to other. So I think they can generate enough money from COVID until they will get points, take money from other diseases as well.
You can keep riding cash cow.
Yeah, just to tell you how crazy it is, BioNTech has a P ratio of 2.77. I just checked that before.
Wow. What was it? What was it during kind of the peak of the market last year? Any idea?
It was like okay, the peak of the P ratio probably was thousands because it was not generating revenue when they still got the vaccine approved, which means very low revenue and a lot of very high stock prices. So probably at that point, P ratio was maybe even thousands. I don't know, but I don't remember. But I think the moment of the Delta variant, which is the moment that the BioNTech reached the all-time high, I think, if I remember correctly, was around 30, something like that. But the forward P ratio was a lot lower.
Okay, so it's come down. It's come down significantly. Okay, something to keep an eye out. Obviously, they're very risky, the pharma stocks, but I think there probably is a lot of upside. Okay, for the sake of time, I wanted to move on to crypto. Crypto's been had an even tougher 2022 than most other sectors, and I think a lot of those pressures had to do with many things that were happening in the stock market. I think the interest rates rising had an effect on the stock market and also had an effect on crypto. I think there was other areas that happened as well, like the Luna UST debacle that happened. And this caused a lot of companies, kind of lenders, etc., to get into financial difficulties. And it seems to have been the companies that were the most over leveraged or were playing the highest stakes poker who seem to be suffering. So yeah, I think Bitcoin's down about 60% year to date, and I think it's nearly 80% since the peak. Zach, over to you. What are your thoughts on what's happening in this crypto market right now?
Okay, I caveat this by saying I can't say a lot of things because of my work, but I will try my best. I think
we'll translate into French the parts that you're not allowed to say.
Okay. No, I mean it's interesting, right? Like the Terra Luna to me was our layman moment. Sorry, it was our subprime moment. So just basically over leveraging the system. The effects and the layman collapse is the 3ACs, the Celsius, the Voyager. I mean, just this week we had one more default coming out of Singapore, but they seem to be saved by FTX.
Three Arrows Capital too, yeah. 3 Arrows Capital was big one.
3 Arrows is huge, and I mean we all from Singapore, everyone knows 3 Arrows, right?
Yeah.
So those people who are over leveraged, I think they have come to light. The default's happening slowly. I think Babel just was also issued a notice of default, so that's kind of interesting. So a lot of crypto firms are going slowly. Is the worst over? I think the worst is over. That's just my opinion. I may be wrong on that. So is likely to get much worse. I think when everybody is like scared and everyone doesn't want to talk about crypto, that's the time to buy it.
Yeah.
But there's still a lot of people still talking about it. NFTs have not. It's not a very liquid market, but it's still very highly priced. So that's an interesting one. We'll see if that comes on. I don't know. I don't see much utility value in having a Bored Ape, but I may be wrong on that. Sorry,
yeah.
Jay, I'm sure Jay has like 20 in his like wallet or something.
I have zero NFTs.
Oh.
Yeah.
Yeah. Yeah, I kind of tend to agree with you, Zach. I think the worst could be over, famous last words. But I think that the longer we are away from when the UST Luna thing happened, and we've already seen obviously those defaults from Celsius, 3 Arrows Capital, BlockFi got into a bit of trouble. I think the longer it goes on, the less likely it is that things are going to come out of the woodwork. And I think people like Sam Bankman-Fried at FTX, and I think Binance are looking into kind of doing some opportunist acquisitions during this time, also known as helping out the industry. But I think they're taking the opportunity to get some snap up some companies for low prices. I think that the worst could be over, but if there is another major default from any of these big crypto firms, then we could see another leg down. But I think it would have to be something really substantial to move the needle.
But I do have to say I find it strange, and I open this to everyone else. Like BlockFi was, I think, Celsius and BlockFi were one of the first two that would come out and say we have a problem. BlockFi has been bought at very, very low valuations, so that's fine. But Celsius is still out there in the market trying to raise capital, so it's kind of strange to me. Is the hole that big that no one can fill it, or is it? I don't know. And if that's the case, then it's going to be a huge issue, isn't it?
Didn't XO try and acquire Celsius?
Did they succeed in doing that?
I don't think so, but I just like a proper letter of or whatever it is that they put in, and an official bid that they put in for it. I think it's interesting that you think that you know, the worst is probably over. I think it's possible that that's the case, but I wrote a tweet. I just googled it actually. I searched for this tweet because I knew I wrote a thread about this.
Okay.
I wrote this in November last year, and it's a long thread. It's very boring. But essentially, it was, the gist of it was that I think a lot of the lending platforms and a lot of the DeFi lending stuff is very unsustainable, and so very, like, the systemic risks from it are massive, because they're all investing in each other and they're all doing it with leverage, and they're all doing it with no revenue. In a lot of cases, a lot of the companies as well, there's no revenue behind it. I mean, if you look at things like crypto.com has responded to all of this as well. You know, they massively lowered their rates, and then they have been basically inserting fees everywhere they possibly can into their platform, presumably cover the costs of all of the marketing spend that they've done, and that they've committed to doing for the next few years. And I think the systemic stuff is the real big risk, to be honest. I still think that there could be a lot more to come. I still think that, you know, with the kind of mindset of where we were thinking with regards to a lot of inflation stuff, and that, yeah, maybe it will peak, but it's still going to be quite high, and that Europe is still a big question mark, and that China is still a big question mark. When you kind of add those things together and you think, like, where's the new capital coming from that's going to be investing in, you know, holding all of these things up? You know, most of these companies that operate in crypto are not doing it with a positive flow. So it's, yeah, like, I think the reason that people are filling that gap is probably because they're just biding their time and waiting until there's a few more offers on the market, more desperation, to be honest.
But I guess there's always there's always a big cleansing in the crypto bear markets, right? And I think obviously a lot of the hot coins and a lot of the cryptos from 2020 2021 will die out. I think it's a bit like tech, right? It's a bit like new tech startups. Many fail along the way. So I think that there could be a lot of pain, for many of the different other cryptocurrencies, and only the best will survive the bear market. But yeah, I tend to think we're not that far away, especially on Bitcoin. I think I don't. It could go lower, but I think we might be nearing a bottom, hopefully.
I think I'll add to that. Like, I think for Ethereum, if you look at Ethereum where it is now, is it likely that it'll halve? I think it's highly possible. Like, highly possible. Is it likely to double? The answer is probably yes, at some point of time. So that immediately gives you a 2-to-1 risk reward. So that's kind of an interest bet to take, like, of current market prices. And if you look at market cap destruction in just Ethereum itself versus like PayPal, it's not even close, right? Like PayPal, like, it's dropped so much. So, and Ethereum obviously has a lot of use cases, and it's kind of interesting. So yeah, I don't know. I think it's a risk reward thing. Just positioning your portfolio correctly, and then hope for the best. I think that's all we can do, right? Yeah,
I think so.
Well, I think only 3 of us are crypto, right? You, me, and
Ingvar, you invested in any crypto or the infrastructure or ecosystem?
I am actually. You probably would not expect that looking at my eToro portfolio, because I don't dabble in crypto over there. But on the private side, I actually enjoy following the space, and I find it simply amazing. So I've really been following crypto since a couple of years. Not always investing very much, but I think now is actually the time to start investing if you haven't invested yet in crypto. So that is something which I believe, and I found the last quarter truly just amazing to look at it, because it's just pure market forces and some other probably criminal forces as well, if you look at certain scams and other schemes going on. But I really like the fact that this is being washed out in markets like these, and it's really, it's just, it's happening like it's supposed to happen. And the big question, I don't have an answer, but and I think it mirrors a bit the questions which you've also been posing here. is really how far does it go? Which other players are going to go bust? And for me, the question is also of the players which we know already that they have basically that they are done. How much of that is already liquidated? Because I had the feeling that at some point everything was just frozen, and everybody knew, okay, if we now throw whatever 10,000, 20,000 Bitcoin on the market, prices of course going to drop, and everybody's going to panic. So I'm just wondering how much of that is still to come.
Yeah, it's a very good question, especially those large like 3ACs, right? They apparently have like a bunch of ape coins and stuff, a couple of NFTs. But the reason why they're not in the market yet is because, like you said, what happens if you just dump a whole bunch of coins there? It's not going to look good.
Yeah, I think it comes down to two factors in a bear market. So I think there's the treasury management part of it for many of the different cryptos, right? And I think that you tend to see the cryptos that go out of favor or lose their popularity or don't continue building to add more to the ecosystem. They tend to be the people that don't manage their treasury very well, and they basically run out of money during the bear market, and they don't continue to build. So that's one area, and I think the other area is those risks who have the higher level of risk, and I think that's what we're seeing now in the fallout of crypto, and we're seeing those who had the highest risk threshold. We're seeing those people being taken out of the market now because they were either high leveraged or they didn't or they were providing too high yields that they couldn't afford to pay out. I mean, a lot of those lending companies, they were losing money during the bull market.
Yeah.
Celsius and BlockFi were actually losing money during the bull market because the rates were really high, and they had to take more and more risk in order to be able to pay off pay those yields. So yeah, it's. I
think. I think. Well, although I said that, I still think that there's a lot worse that can come, and there is potential like systemic risk from a lot of it. At the same time, like I'm also looking at this and thinking like this is the perfect time to start buying into the market. And I think like names like Ethereum and Polkadot, Matic, maybe some Solana, obviously Bitcoin, like those big names I think are, they're really, really well positioned for the long term. I think it's really when you kind of move through that and start looking outside the top 20 or so coins, I still think when you actually look down that list, an awful lot of junk that's still, I mean, Ethereum Classic still in 29th place, that says everything you need to know.
Yes. I think those outside of the top 20, you could have to consider more like VC plays, a very high risk of them going to zero. But obviously a lot of multiples if they do make it into the next bull market. So I think it'll be something to watch. But I think if you look at it as a pure investment play, and you think kind of long term, I think it's probably a good time to dollar cost average into some of the larger coins, because I think even if we haven't reached the bottom, that is quite likely a year and a half later, and that prices should be a lot higher. So, okay. Just because we're running out of time now, I wanted to move on to the last section. And in this last section, I thought we'd have a little bit of fun and we'd come up with one stock which we think is either overrated or overhyped, and one that is kind of underrated or underloved. So I think, can we start off with you, Amar?
Yeah, sure. Okay, so the two stocks or the two industries or assets I'll speak about are both in the healthcare space. So the first one I think is underrated, but not necessarily undervalued. It's a company called Intuitive Surgical. So they are in the robotic surgery space. So I think this space still has a lot of good going forward, and Intuitive in is a company with a very strong moat because they're very high switching costs for surgeons who learn how to use their robotic machines. So I think this stock that can count for many years to come. I don't see many popular investors on eToro that own it. So I think it's still a bit of less familiar name to many. And the one that I think is overhyped, and this might anger Simone a bit, I think is vaccine stocks. I'm not a fan of vaccine stocks. I think demand for vaccine is going to wane as people build up natural immunity. I think there's going to be less of a need for vaccines. Myself, I got a few weeks back, and I got exposure to another person who had COVID later on, and I'm fine now. So it seems like natural immunity works just fine. I didn't get vaccinated the first time either. So it seems I don't really need vaccines. Then the other issue with vaccines is that I'm afraid there may be legal liabilities. If in fact we discover years down the road that there are legal or there are side effects to some of these vaccines, some of these pharma companies might face big legal issues. When we have seen that with Johnson Johnson is facing big legal issue with its talcum powder. So you never know, things could happen to pharma companies as well.
Okay, thanks, thanks, Amar. And we could have you as a devil advocate for the Simone and Nezatron pharmaceutical chat as a detractor. Cool, thanks, Amar. Ingvar, hit us with it.
Yeah. I'm going to start with the overvalued stock. I can finish on a more positive one with the undervalued one. And one company which I think is still very much overvalued is Airbnb. I think they've always been overvalued. In a way, they did it very smart because they IPO'd at a quite high price, and then the price went even higher. They have come down about 50% from their highs, but I still think it's too expensive. So that is, I think people have been playing it, and they are still playing it because they believe in this reopening theme, which to a certain degree is true. But I see them still having troubles generating profit, even in the market at the moment.
Interesting.
And if you look at the undervalued stock, that goes hand in hand with our previous discussion, I think, which is approaching undervalued territory at least, is Coinbase. So they have really been battered during Q2, which is not really a big surprise. And I think it's approaching a territory where it might get interesting for long-term investors.
Yeah, that's gonna be very tied to the overall crypto market prices and movements. But yeah, that's great. Thanks very much, Ingvar. Jay, you want to tell us what your undervalued and overvalued plays are?
Yeah, I'll start with valued. It was very tempted to say Tesla, but I always say Tesla, so I'm not going to do that this time. I think probably it's going to be kind of a controversial one because I know a lot of people think it's undervalued actually, but I think Meta is overvalued. I think that they have aging demographics and have been unable to capture TikTok audience and such. They are extremely reliant on advertising revenue. They're spending billions on their metaverse, and I'm not even sure that they will win in the same way they didn't win with the stablecoin play that they attempted. Yeah, you got like a P of like 13 or something. You know, Microsoft is like 28 or 29. So, you know, on paper it looks undervalued maybe, but I still think it's potentially a dangerous investment, to be honest.
Okay.
For my British one, you can respond afterwards. I'm sure everyone's going to like pounce on me. My bullish one, it's tough to pick just one, to be honest, because I think there's a lot of areas that are kind of interesting. But I decided to just go with what I wrote a piece about most recently, which is Sony. And going into some of the reasons that aren't really as related to the post that I wrote, I think that Sony is a company that obviously is based in Japan. Their revenue for the first time last year, their revenue from the US surpassed Japanese revenue. And they earn a lot of money from Europe as well, and from Asia Pacific. And so because they're in Japanese yen, the yen is weak against the dollar and the pound and the euro and pretty much everything, they're in a really healthy position. You got reopening kind of themes around like movies and stuff starting to start up again. Lots and lots of IP. I think they're in a really healthy position, to be honest. Stable company.
That's a really good one.
Thanks, Jay. To be honest with you, I actually agree with you on Meta as well. But I'm sure there's also probably some other people on this panel that don't.
I'll just say that on Meta, I mean, I don't think the competition for Facebook is TikTok. I mean, they have Instagram, which is doing quite well. There's also news that TikTok might get banned in the US because of the data that gets leaked to China. So that might be a very bullish move for Meta. And I think the metaverse, initially it sounded like a weird, radical idea, but you've seen many other companies adopt the metaverse. NVIDIA, Microsoft, Apple, Google, they're all moving into the metaverse. And right now, Facebook is leading in the metaverse with its Oculus. I
disagree. I think all of them are ahead of web Facebook, I think, in my opinion, except Apple maybe. But
yeah.
And how long is it going to take to play out as well? It could take years to play out.
It could take years though. Yeah. It's generally a very well-run company. I think they have a huge cash surplus. I'm pretty bullish on Mark Zuckerberg in general.
Okay. All right. We could probably do a whole episode about Meta.
We'll debate it afterwards.
Yeah. Okay, Zach, you want to tell us yours?
Oh yeah, I don't know how I'm going to follow that up. Sony is super interesting now that I look at it. Yeah, okay, so I'm going to go with my bearish case first and then my bullish. So I'm going to say Chevron's overvalued. Even though I think oil is going to go up, I think Chevron relative to the rest of the market is just way too up there, just because it's a US stock. So that's definitely overvalued. My bullish call, I just bought a stock yesterday and you guys are going to love this. It's called Wire Encore. So this is a copper stock. Copper has recently taken a shilling. But it's also the electrification has not died out. I think we're still gonna do a lot of investment into that kind of area. So the PE ratio of Wire is 3.2. So yeah, guys, go have a look at it.
Yeah, I might look at that one.
Have a look at. I thought you might go for Joe. Zach.
Oh yeah. No, this Wire is new to me, so I just looked into it last week and I opened a position yesterday, so it's fresh in my mind,
Okay. Cool. Cheers, Zach. Simone, what are your ones?
Okay, I think I already mentioned some of the undervalued stocks, like BioNTech, Merck. So depends if your propensity to risk. High risk, I would go with BioNTech. Low risk, I would go with Merck. Overvalued stock. As today, if you will force me to short some things, I will probably short Twitter. After Elon Musk pull out of the deal, with just the news yesterday or today. If you look at the stock price, it was like still higher than what is compared to Snapchat or other related stocks. It was only up because of the acquisitions by Elon Musk. But now that is not going to happen anymore. It will have to go down. So probably that one. It's a short-term bet. Tesla's probably also overvalued, but has been overvalued all the time. So I will not short that stock. One that was in my portfolio, it's a Bristol Myers Squibb. I had P ratio of 26, so I closed it. It's very unusual for that kind of stocks to have such a high P ratio. I don't see anything in their pipelines that justifies increase in revenues that can match the P ratio. Yeah, and usually it was used to have a negative beta in the past. Now it's slightly positive, but still below 1. So I believe that as the markets will recover, Bristol Myers Squibb will drop. So I just close it.
Okay.
Yeah.
Thanks, Simone. Okay, and I think I went through everyone. Yeah, except for myself. So yeah, I'll try and do mine quickly for the sake of time. So I'll start off with the overvalued one, and I was actually going to go for Nicola, but I thought Jay might do it, so I didn't. But instead, I'm going to go with Xerox. And the reason why I mentioned Xerox is because I think that it has a lot of reliance on the printing business, and I think there's a lot of people working from home recently, and I don't think that's going to change anytime soon. I think that they were already struggling before COVID in terms of their printing business, and I think COVID and then taken a while for people to go back to work, and I don't think they're going to go back to work in the same way that they did before COVID, and this has really had a negative effect on the overall revenue. They're looking to go into other areas and do other stuff like 3D printing, and they're looking at artificial intelligence and other areas, but they have quite a high dependency on the printing business. So I wanted to take something that had a stock which I think has a real fundamental flaw, and I think even if they do turn it around, it could take a long time to shift that dependency on the printing business. And then my undervalued stock is I wanted to go for a stock called Nomad Foods. And Nomad Foods is a frozen food company, and they have some really some really strong brands within the portfolio, such as Birdseye. And Birdseye is a very popular brand in the UK. I think a lot of people have been brought up on Birdseye in the UK, and I think if we do slip into a type of recession and it starts to have an effect on people's wallets, I think that a lot more people are going to eat from home. I don't think we've really seen the pressure yet on people's wallets. I think we've had a lot of inflation, but that hasn't necessarily trickled its way completely yet for people to start spending much less. And I think that they will over time. So I think they're less likely to go to restaurants, etc., and start to use frozen foods. They also are looking very much into the kind of vegan market and ice cream market as well. And they've done some pretty impressive acquisitions, but they've been hit very hard by the inflation costs of food. But just like all companies now, they're looking to increase their prices to offset some of that inflation. So I wanted to choose a company that hadn't done very well over the last couple of months or the last year, but I think that they could have a good future, and I think that they're in undervalued territory. Okay, so I think that's it. Thanks everybody for your inputs. I think we've run out of time now, but there was some really insightful comments and views from everybody on the panel, and I think that the audience will really enjoy listening to this. So thanks everybody for joining.
Thank you.
Thanks everyone.
Cheers.
Thank you.